We finally have some good news. The rate of inflation in the US has fallen to 8.5%. It is not really good news. Although this is down from 9.1% in previous months, it is still very much. Indeed, at this rate, the economy cannot work properly. Thanks to Jay Powell, the chairman of the Fed, who kept us informed that inflation is not a problem and keep printing trillions of dollars. Look at this chart. Inflation continued to rise month after month. The Fed sure knew we were going. There is massive inflation, but the decision has been made to keep the public in the dark. Of course, they had a good reason for doing so. We had a virus that was spreading all over the world. The world we couldn't risk letting people come back. Works, so we've printed trillions of dollars. But the moment Russia invaded Ukraine, the virus is somehow discredited, and we print trillions more dollars. See the number of the cases were before the attack, and there was a huge increase in the number. There was a significant reduction in cases. People are back to work, and we don't have to worry anymore. Treat the pandemic as if it were just another flu-like illness.
I'm not a conspiracy theorist or Trump supporter, but he made such a big deal. Trump when he treated COVID like the flu. If the government decided to open up the country and get the economy back to work instead of printing trillions of dollars, we sure do. In the first place, there will not be such a big inflation.
Regardless of what happened, it is what it is, so that's the question we should focus on. How do you benefit from inflation? We have to adapt to the situation. Learn how to take advantage of a crisis. There are millions of opinions and millions of experts on the internet, but I suggest we take the advice of the greatest investor of all time, Warren Buffett. This is not the first time that the country is going through a crisis. And certainly not the last. Warren Buffett is almost a century old, so he's included multiple inflation periods, so let's know Warren Buffett's strategy to make millions when the dollar has so much inflation. If you are ready, then give this video a thumbs up, and let's get into it. Warren Buffett's first most important piece of advice is, be exceptionally good at something. That doesn't sound like advice you'd want to hear. You probably expected it. Investing in that company or buying that stock. But the truth is that most of all, people don't have the kind of money that they can invest and see easily. How would millions or at least millions of dollars fill their bank accounts? But here's what people are generally good at: trading their time for money. It is which we are taught from primary school. Of course, this is not the best way to make money because your time is limited, but yours time is the only thing you have complete control over, and no one can take it away. So the best way to protect yourself against inflation is to invest in yourself. To be unusual in something. Be it doctor, engineer, teaching, anyone, because it doesn't matter what crisis are we going through, be it inflation, demand for basic skills will always be there. People aren't just stopping going to doctors because of this. Expensive people will go to doctors regardless of prices and people during inflation. Skillfully, you can easily raise your prices without affecting demand too much. The only problem is that you should do so before inflation hits, which means that it is now a bit late, as inflation has been around for over a year and has almost doubled figures in the last few months. So think if you want to be prepared for the next inflation. Investing in yourself, in your skills, in becoming a master of your craft. Be the best surgeon, teacher, or lawyer. If you did, here's Warren Buffett suggests next. Accordingly, the second best protection is an outstanding business, which means a company with there is demand for the product even if the company has to increase the price. No matter how much we hate inflation, it's just part of the economic cycle, is going.
Regardless of whether you like it or not. Another fact is that not all businesses
going to survive. A lot of businesses will suffer when they start lifting prices, and if they don't, their profits will fall below the cost of their products
or services are increasing due to inflation. So what are the businesses that can afford it? Inflation. In a 1981 letter to shareholders, Buffett probably spelled it out as clearly as ever, writing that companies that tend to it must have two characteristics to withstand an inflationary environment. 1. Competence.
Increase prices easily, even when product demand is flat and capacity is not fully utilized,
without fear of significant loss in market share or unit volume. And 2. Viability. to accommodate large dollar volume increases in business often generated by more than inflation.
Compared to real growth, with only modest additional investment of capital. He's basically saying that if a business is selling a necessity like bread, it can
raise its prices and people will keep buying bread. It's not going to change anything. Secondly, the business does not require additional heavy investment to grow or adjust.
To illustrate the situation, if it is a railway business, it takes a large initial
capital for construction of railways. However, if it is an online business, serving an additional clientele, nothing will cost extra like the App Store. An additional user is not going away. Apple to spend anything. Even 1 million extra users doesn't have to make Apple
any significant investment in the App Store to manage this.
So what are the companies that Buffett invested in during the current inflation? Buffett did not reveal everything he bought but mentioned several highlights, including
increasing Berkshire's stake in oil giant Chevron to $26 billion, up from $4.5 billion. To make it one of the Jamaat's 4 major investments at the start of the year. Berkshire. It also spent billions buying a 14% stake in Occidental Petroleum in the first half of March.
And added to his already large investment in Apple stock.
Oil prices are rising due to the reasons we explored earlier, and people are not leaving.
To stop using oil, regardless of price, demand will only continue to grow. What is happening?
At the end of the day, rising oil prices will only have an effect. Everything else. The business will pass this cost on to the consumer.
Second, Apple is the type of company that has turned technology into a necessity. Just because we're going through such a big crisis, doesn't mean people are going to stop buying iPhones or MacBooks. iPhones are an integral part of the global economy. People have built the whole
business around them. People may stop buying cars, but not iPhones or MacBooks. They
not going to get rid of their Apple subscription. This is a new reality that they have created.
And that's why, despite the fact that Buffett avoids tech companies, he happily invests. Apple and its investments have paid off handsomely.
But even if you have this information in your hands, there's not much you can do about it. What
are the chances that you can choose a great company? Although these are important features, you still need to go through their financial statements to make sure they have enough
liquidity. They are not going to go into debt. They have a huge profit margin. They are not one stop away from bankruptcy. Management is quite savvy, and the company has vision. Board, these are all indicators that you look at to make sure the company.
The investment you are making is a great investment, but most people are not able to do that.
This is not an insult. This is just a fact because people are busy mastering themselves. Craftsmanship. Most people don't have time to master the art of investing. That's why Buffett has a piece of advice for everyone. I don't think the average person can pick stocks, and recommends the S&P 500 index fund for longer for people. We have enough data to believe that over the long term, the S&P 500 has generated very good returns. It has outperformed most hedge funds and has proven to be an excellent hedge against inflation. But you have to be patient, because in the short term, sometimes the S&P 500 has done very well. But over the long term, at least 10 years if not more, the index has shown returns about 10% annually. So if you are not in stock, or you think you're a better investor than Warren Buffett, when in reality your portfolio is significantly undervalued after a Fed rate hike, you are very better than listening to Warren Buffett and just putting your money in an index fund. To be honest, despite the fact that I pick individual stocks after careful analysis, I still follow this advice. A large portion of my investments are primarily in index funds. Vanguard S&P 500. It is actually up at least 15% since its bottom line. Back to June. That's it for today. Thanks for watching, and see you next time.